The conversation about the dollar's demise has moved past theoretical debate. We are witnessing the active construction of its successor. This isn't a maybe or a distant someday. It is happening in real time. On January 15, 2026, the BRICS coalition officially debuted the unit, a fresh medium for global settlement. This isn't just digital ink on a screen. It's a tangible trade currency anchored by 40% physical gold and 60% by the sovereign currencies of the BRICS nations. Forget the academic white papers and the what-if scenarios. This is a functional live alternative to the greenback currently available to nearly half the people on the planet. If you haven't grasped the mathematical certainty of what follows when the dollar's reign is broken, prepare yourself. You are about to witness a domestic economic shift that will make the 2008 crash look like a minor speed bump. Over the next 25 minutes right here on the Economic of Fallen Empires, I'm going to break down the mechanics of this shift, why the pace of change is shattering every expert test timeline, and precisely what this does to your bank account and your future. We aren't just looking at a currency war. We are watching the controlled demolition of the financial scaffold that allowed the United States to spend wealth it did not produce for the last 8 decades. When that structure snaps, the world changes forever. To understand the gravity of this moment, we have to look at the bedrock. Since 1944, following the Bretton Woods Agreement, the U.S. dollar has been the world's primary reserve. Global currencies were tied to the dollar, and the dollar was tied to gold at $35 an ounce. More crucially, the lifeblood of the global economy, energy, was traded exclusively in dollars. This granted America what experts call exorbitant privilege. In plain English, because every nation needed dollars to conduct business, there was an insatiable global appetite for our currency. This allowed the U.S. to run massive trade gaps, bringing in mountains of goods while exporting nothing but paper year after year without facing the music. We print the bills and the world sends us cars, oil, and electronics. Because foreign central banks needed these dollars to function, they recycled them back into U.S. Treasury bonds. This created an artificial hunger for our debt, keeping our interest rates lower than any other nation could dream of. This privilege allowed us to ignore a $800 billion annual trade deficit and a $38 trillion debt mountain. This wasn't built on American innovation or superior productivity. It was built on a monopoly. And on the Economic of Fallen Empires, we track the cracks in that foundation. That monopoly is evaporating today. The last 60 days have shifted the timeline into overdrive. As of January 2026, the unit is no longer a concept. It's an engine. Russia and India are already swapping oil for units. China and Brazil are moving massive agricultural shipments through this new system. Even Saudi Arabia is at the table discussing oil contracts priced in units rather than the dollar. This is the parallel world going live. Consider the significance of Saudi Arabia joining BRICS this month. The petrodollar era in 1974 handshake where the Saudis priced oil in dollars for U.S. military backing is officially in the ground, with the House of Saud now settling trades in yuan and units. The primary pillar of dollar demand has been pulled out. They aren't just diversifying, they are exiting. Russia has already cleared its books of U.S. debt following the 2022 sanctions. They do'n't want the dollar, they do'n't trust the dollar, and they've built the door to leave it behind. Let's look at the cold, hard math of a lost monopoly. This isn't an abstract chart, it's your cost of living. Currently, the U.S. consumes $800 billion more than it creates every year. We get away with this because nations accept our currency in exchange for their physical resources. But what happens when they no longer need that paper? When China can buy energy with yuan or Brazil can sell soy for units, the global demand for the dollar craters. When demand falls, value vanishes. If the dollar drops 30% against the world, every single thing we import becomes 30% more expensive in an afternoon. This leads directly to government insolvency. We are already paying $12 trillion just in interest on our debt at 3% rates. If those rates climb to 7%, as we reforce to refinance, that interest bill jumps to $26 trillion more than the total sum of all individual income taxes collected in America. The budget becomes a mathematical impossibility. You can't tax or cut your way out of that hole. The only solution is to print more, which fuels a fire of inflation that burns the dollar even faster. It's a terminal spiral. Your lifestyle built on cheap debt and inexpensive imports evaporates. Your wages might tick up 5%, but your expenses will leap 30%. Your retirement is essentially being taxed away by a devaluing currency. This isn't fear-mongering. It's the inevitable result of losing reserve status. The BRICS unit isn't just a coin. It's the infrastructure for a new world. We are currently in the operational launch phase. Stage 1 was the talk the years between 2014 and 2020. Where the West laughed at the idea of a dollar rival. Stage 2 was the construction where China built CIPS as a SWIFT alternative and Russia developed its own financial messaging. Stage 3 is where we stand today. January 2026. The unit is live and the oil is flowing. Stage 4, which we expect by 2028, is critical mass. This is the point where the system becomes self-sustaining and the dollar loses its majority share. The data is already screaming. 90% of Russia-China trade is now in local currencies. 23 major nations, including Turkey, Indonesia, and Mexico, have applied to join this bloc. These aren't minor players. They are the manufacturing and resource hubs of the future. Once this network reaches a certain size, it won't need the dollar for anything. We are talking about $10 trillion in annual trade that simply vanishes from the dollar ecosystem. That is the demand destruction that ends our era of privilege. History gives us a clear roadmap. The British pound was once the undisputed king, backing a quarter of the globe. People thought it was eternal. But after the death of World War I, the tide turned. By 1944, the dollar had taken the crown. The pound didn't disappear, but Britain lost its privilege. What followed was decades of austerity and a permanent decline in their global standing. We are repeating this history, but at 21st century speeds. The U.S. has accelerated its own decline by weaponizing the financial system. When we froze $300 billion of Russian reserves, we told every country on earth that their savings are only safe as long as they agree with Washington. By cutting nations off from SWIFT, we turned the global payment rail into a battlefield. Every developing nation saw this and realized their sovereignty depended on finding an alternative. We didn't just invite de-dollarization, we forced it. So what should you watch for in the coming months? In the second quarter of 2026, keep an eye on unit trading volume. If it hits $500 billion, the system has taken root. By the third quarter, watch for a long-term oil deal between Riyadh and Beijing, priced in yuan, or units, that is the official death certificate of the petrodollar. If the dollar's share of global reserves dips below the 50% psychological threshold, the game changes. To protect yourself, you must reduce your total dependency on the dollar. Diversify into hard assets, gold, silver, or even Bitcoin for those who can stomach the ride. Look toward international markets that will thrive as the dollar weakens, and focus on companies that produce real-world value like energy and commodities. The sectors that rely on cheap debt and dollar dominance are the ones that will be hollowed out. The bottom line is simple. The world you grew up in, where the dollar was the only game in town, is over. Here at the Economic of Fallen Empires, we track the math, not the politics. The exorbitant privilege is ending, and America is about to be forced to live within its means for the first time in nearly a century. If this deep dive helped you see the reality behind the noise, subscribe and turn on notifications. My next video will detail the specific assets that have survived every previous reserve currency collapse in history. You cannot afford to miss it. Stay sharp, stay prepared, and remember, the math doesn't care about your feelings. Would you like me to start drafting that follow-up script on the historical asset playbooks for you?